What's going on, everyone? Welcome on into today's video. We're diving into Robinhood and we're going to be covering stop losses on all fronts here on the Robinhood platform. So we're going to walk you step by step how it works, what you need to know, and then we'll dive through examples also on options. We'll do trailing stops. So we kind of cover all the aspects of a stop loss order that you can use on the Robinhood platform. We're on the web app, so we've gone online on our browser and we're using it. It's going to look very, very similar on your mobile, on a tablet, whatever. It's the same thing, so it's bigger for us to see. That's why we're doing it here. So we have GoPro pulled up on the screen. What I want to do first is I bought a share of this just to demonstrate how this works. We're looking at the chart for this. People don't understand that you actually can change and customize this a bit more. If I go to advanced, I'm able to add some indicators. I can look at candlestick charts, which is actually kind of cool, and I can change this back to lines if I want to, but candlesticks are actually quite cool, and we actually have plenty of videos already on the channel diving into the different styles of candlesticks, what they mean, if you want to learn more about that. But let's just jump back to the platform right here where it's like the traditional page everyone's familiar with, and let's talk about it. So I bought a share. It's the same thing. You go ahead, you click on buy GoPro, you go buy the amount of shares or buy the amount of dollars of the stock you want. They'll do fractional shares, all that great stuff. Cool, awesome, we're good. But now once I'm in the position and I want to put a stop loss on, I have an average cost at $9.18. Let's just say I bought a ton of GoPro for like a day trade or even a swing trade, whatever it is, right? And I got a couple thousand shares, whatever the number is, and I can't afford if GoPro falls under $9 a share. If it does, I got to get out. I got to set a stop loss. That's my cutoff point, or I identify on the chart, hey, that's the spot that I need to get stopped out at. That's the purpose of a stop loss, okay? A stop loss purpose is essentially there to protect you and pretty much cap your risk at a specified level that you can set. Now, there are many different ways to do that, and let's dive into them. So I'm going to go over to sell GoPro, click on sell, and instead of having to go through this order form right here, you're going to see that there's no option for a stop loss. It's not the same as like Webull, which we had a video just recently, I think last week, we posted a video going over how to use a stop loss order on Webull. We covered all that stuff, so check out that video if you guys want to. But this little arrow right here, you're going to have to click on this little arrow, this drop-down menu, and change the order type. That's what you need to do. So you can see that there's a stop limit, there's a stop loss, a trailing stop. So a trailing stop is essentially the same thing as a stop loss, except it'll trail it, and we'll dive into that example in a second. But we're focused on the stop loss order and the trailing stop order. The limit order and the stop limit order are different orders. We can do a separate video on that specifically if you would like to, so let us know in the comments section down below if you want us to talk about the stop limit, which is a bit confusing, but it's actually, once you kind of get the hang of it, it's actually kind of cool, and it could be useful in your own trading and investing. So I want to click on stop loss order first. Now it's quite simple. I have one share, okay? I don't need to stop out my entire shares. I could, if I had 5 shares, I could stop out of 2 shares. I can do whatever I want, right? But I'm gonna now set my stop price, okay? Now, when I set the stop price, what's gonna happen is if GoPro hits that price or below, it's gonna trigger the stop and it's gonna get me out of that position. So like I said, $9 was my stop. I tend to not want to go to exactly the whole number. I'll go a couple cents below. So in this case, I'm gonna go with like an 898 or an 897 potentially you can use as your stop loss order. So that's what I'm gonna do. I'm gonna put a stop loss at 897 for one share. That's my entire position in this example. And then this right here expires. Good for day means that if this happens today, great, I'm out. But if it doesn't happen today and it happens tomorrow, well, they're gonna cancel my order at the end of today. So I need to make sure if this is a swing position or if this is a stock I'm looking to hold for a longer period of time, not just a day trade, I need to make sure I click on good till canceled, and they're gonna keep the order alive for 90 days. Okay, I have 90 days, and then after 90 days, Robinhood is going to cancel my order, and then I'll have to go back and re-add the order in if I would still like that stop loss to be where it is, right? So I'm gonna make sure I select what I need to select there. In this case, good for day is fine. I go to review order, and then just like that, it'll give me a little bit of a summary explaining what's going to happen. And what the summary says actually is quite important as well. You're placing a good for day stop loss order for one share of GoPro. When the price of GoPro reaches $897, we will trigger a sell order. Bid, and they give you the current bid, the current ask, all that stuff. So once it hits that price, it will then trigger my stop loss, and it will sell my shares of GoPro right then and there. Now, really, really quick, going into the details of how this works on Robinhood's side, you need to understand that when this happens, a sell market order will get issued. So when the 95 hits in this example they're using, but in our case, when the 897 hits on GoPro, they're going to have a market order immediately hit. Now, in this case, the bid is at 914 and the ask is at 916. Not a huge deal. But if you were looking at a stock that had a very large spread between the bid and the ask, they're going to sell a market order. You might get sold at a pretty nasty price because there's not so much volume in the bid and the ask. The spread is quite large. Just make sure you are aware of that. When you're looking at penny stocks or stocks that have low liquidity, less volume traded, it could be possible that your stop could get hit on a very low amount of shares and you get a terrible fill price. However, the stock ends up bouncing back only a few minutes later if someone else comes and buys it back because the spreads are that large. Just make sure you're aware of that on stocks where the bid and the ask, the spread is quite small. Not a big deal. It's fine. It'll work just fine. But just make sure you're aware of that. Okay, so now I would go ahead and click on sell and that would set the order up and all that stuff. But I'm going to actually go back. I'm not going to do this. I'm going to go here. I'm going to change my order type to a trailing stop order. And now let's explain how this works. So there's a couple of different ways you can go about it. So you have a trailing stop order and it has percentage by default as the trail type. I can change that to amount. Now, the amount, we'll do the amount first. It's quite simple. I will trail. Now, what this means is that GoPro right now is at 917, 916 as I speak, okay? If I set this to be a 15-cent trailing stop, from the current price that GoPro is when I set this order, 15 cents below is the stop loss. So right now, if I click on review order, place it, and GoPro is at 916, that means that at $9.01, if that hits, I'm going to get stopped out of GoPro, okay? Market order, it'll stop me out. That's it, okay? I might not get filled at exactly 901. I might get filled 9 or 899, depending upon the bid and the ask spread, because they'll be using a market order to get me out, but that's how it works, okay? So in this case now it's 914. A 15-cent trailing stop means at 899, it'll stop me out, okay? Simple. Again, good for day. Same thing applies here. Good to cancel, good for day. That's great. Now, this is cool because you can kind of, if a stock's moving up, you can kind of have this trail behind it. Let's say GoPro goes to 925, 950, 960. Well, then guess what? My trailing stop, if GoPro pops to 950 today, $9.50, my trailing stop loss now at a 15-cent trailing stop, guess what? That's at 935. So now if I bought at 918, I've guaranteed a profitable trade. I literally walk away, I go to the gym, I go here, I go wherever I want to go. I don't care. It will do it for me. And if GoPro pulls back in a substantial fashion, which would be like 15 cents, great. Stops me out. I still lock in gains. And if it keeps going, my trailing stop continues to trail behind and keeps, rising up with the current price by whatever I set. Now, you can probably imagine that the trailing amount by percentage is the same exact thing. I might want to trail by 3% and say, hey, I want a 3% trailing stop. So in this case, I enter GoPro right now and I say to myself, if it falls 3%, that's the max I'm willing to risk. I don't want to risk more than 3% of my money. I put a 3% trailing stop on just like that, and I walk away. If GoPro goes up 5, 6, 10, 15, 20% from where I'm in, let's say I use a good till canceled. GoPro goes up, takes a couple of days, it never actually pulls back 3%. I'm riding this guy along, and I don't care, and it's just moving along. And guess what? After it made a nice little run, I'm in the green. Even if it falls 3% and stops me out, I'm in the green. So that's how it works when it comes down to using these stop losses. I think it's quite useful, and I would highly recommend adding this to your own trading or investing if it makes sense. Obviously, if you're going to be using stop losses, but you're going to put like a 1% trailing stop, and we're in a very volatile market, that might not make sense because stuff can get hit and then bounce right back, and it's not the best idea. It works best for stocks that have now gone into the green, have now made you kind of the money that you were looking to make. You may be taking some profits and you want to let the rest ride and not have any emotions at play. This actually works really, really well. So if I do a 5% trailing stop, I'm going to do a good for day. I'm going to go to review order. Same exact thing. It will explain to me what happens that when GoPro falls from its highest price by 5% will trigger a sell. So right now it's at 913. Okay, that's fine. But let's say GoPro pops to like 925 today. If it falls by 5% today, it'll sell me out, okay, with a market order. Click on sell, order placed, all good to go. It'll then show up in your upcoming activity as an order placed. I can go back, review this, or I can cancel it right here underneath my current position. Okay, great. Now, let's get to the fun stuff. That was for shares, okay? If you want to learn how this works for options, well, we got an example for you right here. I have this one option contract right now as we speak that I am holding, and I'm going to go through how you would go about putting on a stop loss on this as well, okay? So people don't realize you can use stop losses on options on Robinhood, which is great. So here's my position. It's actually, expires in, like 6 months from now, whatever, who cares? Not a big deal. But what I'm looking at right now is I'm going to go to sell to close and then again to the drop down. And in this case, for the drop down, we have two options, a limit order or a stop limit order. We want to use the stop limit order for using this to stop out of the option contract. Now, the reason why this is important and the reason why this is how this works is because options can be a little more spready, right? There could be a bigger spread between the bid and the ask on the option chain. So it actually kind of makes sense why this is how this goes. Other platforms will have just, a regular stop. This is kind of how you have to use it, at least as of right now when we're filming this video on the Robinhood platform. So I have one contract here. Let's say I set a limit order. Now, in this case, I'm going to set my stop price first because what this means, a stop limit goes in that order. So it hits the stop, then it will then execute the limit order, okay? So this doesn't mean it's going to get filled. Now, I'll explain why. If I set a stop price on this for $1 per contract, right now it's trading at $1.40, okay? A $1 stop on this contract means if this contract trades at $1, that goes through at some point today, or I can change this to, good to cancel in the next 90 days, it will now trigger the limit order. But my problem is that, well, the spreads could be pretty large, and if it's not a very high volume contract, I could get screwed, honestly, for no reason. So I don't want to get screwed for no reason. So what am I going to do? I'm going to set my stop price to 1, and then I'm going to come in here and I'm going to set my limit order. And I'm going to make that limit order $1.10. This way, I'm not going to get filled at less than $1.10 if I go about it this way, okay? If it hits my stop price, great, the stop triggers the limit sell. Now, once I can get filled at 110 or better, I'll get out. On the sell side of options, they are not going to fill you lower than your limit order. It's the same thing with shares. If you set a limit order, okay, for a sell, okay, if I want to sell a share of GoPro, go back a second. If I want to go sell a share of GoPro, it is not going to sell my share of GoPro less than what I specify in the limit order. It'll be that price or better. Same with the buy. If I do a buy limit, it's that price or better. So it's the price I set or lower when I'm buying, okay? In this case, I'm selling. So that's how I'm going to go about doing it, okay? If I make these, I can, arrange these however I want. I could make the limit price at $1 as well to get pretty much filled right away. And essentially, it's essentially just a stop loss order, right? But I may not want to do that because there may be a lot of, there may be a big spread between the bid price and the ask of my options. That's all it really means, okay? So I go to review order. It'll give me some information. In this case, there's not much volume on these contracts. So right now it's telling me my stop price is at or above the current ask of $0 because right now there's very minimal volume. These contracts expire in 6 months and they're down today. At least the underlying stock is a 3X CTF and it's down today. That's why. But if I did so, it'll give me a little bit of a, okay, here's this, and then I can go ahead and execute this order. So real quick, that's how it works. Let me go through the example on GoPro so you kind of can see it better. Just pretend that this GoPro share was an option contract, and we go to a stop limit order, the same exact thing that we were just looking at. Now we're just looking at it on the shares, okay? So if I want to do one share, good for day, obviously I have to make sure I go and cancel this current sell. I cancel the sell order that I already had previously placed. Make sure I refresh it just so that we're all good to go here. I go back in here, go to sell GoPro. I go over here to a stop limit. I'm going to go down to one share. I'm going to set my limit price to, let's just say $9 a share. And I'm going to do a stop price at $8.97. So what does this mean? This means that I am going to trigger the limit order if GoPro hits $8.97. So why would I do this? If GoPro flushes below $9 super quick, hits $8.97, but I don't want to get filled at the worst possible time when it's flushing down. Maybe I'm anticipating it could bounce back really quick and then fall back off. That's why I would set my limit price higher than the stop. But that's how it works, okay? That's what you would want to do. And that's the reason why, or that's how you could play this order. I go to review order, I go to sell, and just like that, order is placed, we're good to go. So if GoPro falls to 897, it will then set my limit order to 9. And if GoPro gets back to 9 or better, it'll take me out. Now, the risk here is that if GoPro falls below, or that option contract falls below, right, what I set as my stop and just keeps going down, you may never get filled. You'll have an order set, but you may never get filled. So you could go about this a couple different ways, set your limit order even lower, or come back and check on the stock and just get yourself out if you need to. That's how it works. Hopefully that was helpful. Any questions, leave them in the comment section down below. If you want to see how this works on Weeble's platform, go back and check our last video. We got plenty more where that came from when it comes to playlist, when it comes to Weeble, Robinhood, all that good stuff, and a ton more on the channel already in the playlist tab. We're going to leave a link to a webinar covering 3 awesome trading signals to add to your investing and add to your arsenal. That'll be linked in the video pinned comment and description box down below, completely for free. Outside of that, make sure you are subscribed, thumbs up button. Let us know what you want to see next, and we'll see you guys in the next one. Peace.